we've got an interesting representation, real estate, markets, and private equity. So let me start with markets, which is always the most interesting. Dipen, are the markets disappointed or are they neutral at this point?
No, I think markets are disappointed, and clearly we could see that until the time.
But they've not crashed. I mean, I really meant that. I mean,
That's because there was hardly any expectation from the market viewpoint. But on the whole, I think the various taxation proposals, especially the increases in surcharge, were not very well received.
And are you talking about surcharge on income?
That's right, surcharge on income as well as surcharge on corporate profits, which are more than 10 crores. So those were minor disappointments per se. And there was no real, attempt to increase or improve growth prospects, which is the absolute need of the hour, considering that GDP is at around 5% or thereabout. So while he started the budget by saying that he wanted to, take steps to improve the GDP growth rates and industrial growth rate, end of the day, I don't think there are any specific proposals, apart from there being no fresh increases in indirect taxes.
If you were to look at the companies that you would actively track, let's say Nifty or Sensex, I mean, how many of those companies are really dependent on what the government will do in India?
No, hardly any, but budget end of the day is just a statement of accounts. But in India, it tends to kind of, set the sentiment, at least it used to. And over the years, of course, the importance has diminished. But nonetheless, I think, it gives a direction to the whole market and the economy per se.
Niranjan, what's your sense? Was real estate expecting a bigger shock than what?
I think we did expect, with Mumbai having 50% people living in jhopatpattis and the fact that it has a multiplier effect on the economy and it affects 300 plus industries and it's very employment generated, I think there was some expectation that real estate, at least in the affordable segment, would really see it. We did see a minor benefit in terms of small loans up to 25 lakhs to get 1 lakh deduction. But I think that's a very, very small benefit and it's only prospective. So people who have taken loans 2 years ago and continue to pay for that interest today are not benefited. But it's only for new persons and we don't know how long this benefit, because he talks about additional benefit that would be given. But I think all in all, if I see in the last 5 to 7 years of my career in real estate, what we have seen is that the overall taxation, which includes VAT, service tax, development charges, other taxes which you do, land under construction, etc., it used to be about 15 to 20% in various states in terms of an affordable house. Today, it's reached to 31% of the total value of an affordable house. And I think that's disastrous because you can never make affordability a criterion for housing. I think that's really dangerous.
What would that figure be in another developing economy?
I think it would, no, there are again segmentation. If you look at affordable segments, it would never exceed 10%. But in the higher segment, I can understand 15, 20, 30 also is fine. But in an affordable segment, which cuts across the board, to have 31% of an affordable house to be direct and indirect taxes as components of total price is ridiculous. I mean, it's never heard of. And if you're talking about being successful in terms of making affordable housing and reaching housing revolution, which will mean housing for all in the next decade, is an impossible task.
What about the TDS?
TDS is minor because most of it, lands which are purchased are people who are already paying taxes. So I don't think that's going to make a hell of a lot of difference. And also the fact that person who buys a residential house out of capital gains is tax-free. And the third, most of the rest of the purchase is from farmers, which are anyway non-taxable. So I don't think that is really going to cut ice too much in the real estate sector. Maybe a few people will come into the tax net, but that's marginal.
Right. So, Manikan, your ICICI raising, you said you were raising a fund of $300 million, which will invest in $750 million, of which 300 is your first stage, which will invest in infrastructure projects like power and roads. So how do you see the budget in that context?
So I think the government has always laid emphasis on infrastructure. So I think in continuing with the past tradition, finance minister has done the same in this budget. I think there are a couple of interesting developments that he's talked about. One is the road sector regulator, which I think is a positive thing because of the litigations and the disputes that we've seen in the past.
Because which were going straight to the courts, instead now you'll have a regulator in...
Earlier they used to go to arbitration tribunal, but I think now at least with the regulator coming in, at least he could look at some of the documents and say whether it is fair on both sides or not. And maybe it will bring down the litigations and disputes in the sector. So that I think is a good sign. And I think he also announced about 3,000 kilometers in the first phase, in the first half of which I think is normal. The only thing is the problem with infrastructure is that the projects are not coming out. And I think if they can expedite that, which he talked about in the context of the Cabinet Committee on Investment, meeting more often to clear oil and gas projects and some of the other sector power projects.
So that's been a bugbear for a while now. I mean, several years, and industry has been complaining loudly about this.
That's right.
I don't think, or do you feel, for instance, that the budget actually addressed this?
The budget doesn't really...
Or maybe it can't.
It doesn't directly address and it can't directly address. Only two things I would say is that if you look at the coal availability problem for the power sector, which is an acute problem today, and that is being addressed indirectly because of the current account deficit, and we're talking about 100 million tons of coal going up to 150 or 180 million tons over the next 1 or 2 years. So he's trying to arrest that by saying, okay, let's do PPP in coal mining and the details will be announced by the Ministry of Coal. We haven't seen the details of that. So that I think could be an interesting way to see how to break the monopoly of the coal sector by bringing in more private sector participation and improve the efficiency of the sector, and how that.
So you're saying that the infra problem is being fixed because the current account deficit is being fixed?
In a way, yeah, in a way that because that coal is a real big problem, gold is a real big problem, oil and gas is a big problem. We can't directly address oil and gas. We're doing it through price increases,
right.
And the gold we are trying to put through import duty hikes. Right. So that's the way we're trying to resolve that, and on the flip side, we're trying to resolve that through more FDI and FI investment. So that obviously is a political issue, like increasing the stake in insurance and PFRDA. So those are the other kinds of things that.
Okay. So Dipen, one of the bottom line questions when a budget is announced is really what does it mean for the small investor, or will it attract more small investors or investors, and to some extent re-expand the equity base in this country? What does this do?
Well, not much, but I think some steps have been taken for financial inclusion. First, the RGESS scheme has been extended to 3 years. That's one positive. Then secondly is this introduction of inflation index bonds. So that would mean that real assets like gold and maybe real estate or land may be less attractive, and that would bring more money to the financial system. Third, I think he spoke a lot about trying to sell insurance through banks as well as through LIC, and directing them to open branches at even smaller towns and villages. So he's trying to get more and more small savers into the financial services fold. And that is a long-term process, but certainly beneficial because...
So that's really my next question. I mean, the budget seemed to have, and I would put this to you gentlemen as well, it seemed to have some of these elements which reflected long-term thought. I mean, for instance, he said that, one of the complaints against CSR, mandatory CSR, was that, where are you going to put it? And the budget said that you can invest it in technology incubators, right, with some conditions, of course. So there seems to be some thought which, in some areas, I don't know if you agree with me, Dipen.
Yeah, absolutely. And not just there, I think some of the other issues also, like, easing foreign flows, whether it's to FI, FDI or foreign portfolio investors. Some changes have been made over there. It's been relaxed, and some of the irritants may have been done away with. So in that sense, the budget is to be viewed as a direction to the regulator that, kindly make things easier for the investor to come into the market, be it a small investor or a foreign investor, and let the flows keep on coming through. Also, he's raised the limit for tax-free bonds. So there are some efforts being made to generate more and more
So
funds.
what's going to bring investors back? I mean, now it's almost 4 or 5 years since investors have been active in the markets, isn't it?
I think growth. End of the day, I think investors get attracted if there is growth in earnings and markets, are rallying.
But foreign investors continue to invest, $24 billion last year, but whereas domestic investors don't seem to have the same level of confidence.
See, foreign investors, look at the world as a whole, and that's the whole canvas, and they see India as less of a problematic area than some of the other geographies they're dealing with. For an Indian investor, he has a choice between investing in gold or investing in real estate or commodities, and there are so many other options which are far more attractive than equity at present. But that could change. All you need is 2-3 years of steady returns in equities, and you will have a lot of investors flocking to our markets.
Okay.
I'd like to take the same question if that is there. He talks about trying to attract investments. But if you look at the International Finance Corporation talking about ease of doing business, enforcing contracts, and dealing with construction permits, we are somewhere close to about 180 out of 185. So I think somewhere down the line, when he talks about ease of doing business with India, what has been the experience of people who have put in the money is quite a disaster.
But he did, and he did.
But he has addressed it. He has addressed it.
India must be seen as friendly and
yes,
mutually
I think it
beneficial.
was very, very positive on his part to identify the fact that there is a disaster at that point of time in terms of actually implementing these particular things. And I think that's an important recognition. Once you accept that there is a disaster for persons coming into this for the purpose of investment, I think that's half the answer. that you're trying to find out ways and means in order to help these people to overcome such problems.
Manikan, how are your investors responding?
This whole budget, both for easing out investment flows, I think it's positive. And the reason why he's done it is from the current account perspective, as I see it. And he can address in three ways: FDI, FI, and ECB. He's addressed the FI part pretty easily because that's easy to manage and control. FDI requires a lot of changes in law, which needs to go to the parliament, which requires majority and is politically also very difficult sometimes, like the insurance bill and other things. So I think he's tried to do whatever is been in his purview, whatever he could do. So I think in that sense, it has been positive from the investor's perspective to come in. And the other thing is he's also removed the irritant of GAR, which you talked about now from April 16, of course, within the overall blanket that it will be followed.
So that was another concern for investors, right, in the market, saying that, what if there's another footnote like the GAR somewhere and it hits us later?
That's right. So I think he's addressed that part, and I think he's also addressed the pass-through status for the alternate investment funds. Although from my listening of the budget, it was more like the category 1, so it's not clear whether category 2 and other categories are covered under that. So I need to look at the fine print of that. So I think because infrastructure falls in category 2, and that should technically get that pass-through status. Otherwise, it creates another layer of complications for investors to come in.
Right. Dipen, were you expecting a disincentivization of gold purchase or import?
Yeah, well, but he already raised the custom duty on gold, so that was not to be expected.
No, I mean like a serious number. I mean, there was one number was 30%, for instance, floated by.
Yeah, but that wouldn't have worked. It would have taken the whole entire activity underground, so that was not desirable.
Stakes of smuggling up.
Yeah, exactly. So that extent, but in a way, I think he's made it easier by increasing the limit to 1 lakh rupees
for baggage,
for baggage,
personal baggage.
Yeah. So, but on the whole, I think that for investors to come to the market, you need the returns. The returns come when the inflation rate and the interest rates are lower, and to the extent that he's able to achieve the 4.8% fiscal deficit target, that will go towards reducing the interest rates via lower inflation. So if you're able to achieve that in a sensible manner, not just cutting expenditure across the board, then that will be very positive for investment from the investment climate point of view.
Yeah.
And could attract even more FI.
So the housing still remains unaffordable. I mean, it's the complete opposite of stocks in some ways. Right?
Absolutely.
So why? I mean, what can the government do, if at all? I mean, and what can industry do about this? And why should only government be responsible?
I'm not saying that government should be responsible. We have a policy paper called the National Housing Policy on housing, and we have all the answers which are already documented, approved by Parliament, and with the ministry. All you got to do is execute it, and we know how to do it. I mean, it includes infrastructure, it talks about increasing of FAR, it talks about simplification of land records, approval of building plans, and actually moving all this into a fast process. The reality on the ground has been the opposite. So they've increased the taxes in the thing. The FSI is certainly not increased. The permissions take much longer. It takes now 2 to 3 years to get projects approved, and many times after getting approval, they again get stopped by saying that somebody who approved it did it wrongly. So I mean,
it's happened only in 1 or 2 cases.
I know at least 50 in Mumbai that have happened. So it's not something which is strange for one project.
Okay. So
and
one is the one which I read about, I guess.
No, there are 50 of them which have happened, and not only that, halfway down you have to get some other permissions, and you have to get further CCs, and you have to get additional FSI to be done, and then TDR to be incorporated, and fungible FSI to be cleared, and all these things take a lot of time.
But what is the industry doing? Not that I'm holding you responsible for it, but there is a certain degree of murkiness in this industry, and perhaps that's the reason.
You know, everything looks murky when you don't create surpluses. If your policy paper refuses to allow you to create surpluses which are required by the market, you are going to create dirty markets. I mean, it happened even when you had telephones. There were babus who would create problems. It took a 5 year to wait to get a telephone or even a car or an ambassador or a Fiat. So, I mean, if you're trying to look at it from both points of view, the secret is in what we did in 1991, which was open up the markets and allow deregulation to take place in a substantial sort of way, increase the FAR. And remember one thing, we are the only country in the world now, barring some few African countries, who have not succeeded in providing affordable housing to everybody. So it's not that there is some big secret about how it needs to be done. There's no technology import like you need for telecom. We have everything over here. Land is available. Everything can be done. But the ridiculousness is that we haven't walked the talk. And there's no leadership in housing as you have in other sectors of the economy. Right. That's it.
Right. So, Dipen, how do you see the year panning out? I mean, you know, the Sensex is still under 20,000. It kisses and then goes back. Are things likely to look different?
Well, I think that maybe you can expect some more months of such range-bound trading, considering that corporate earnings are not growing at the way that the street is expecting, for one. And secondly, we do hope that FIs continue to plow in the money which they have been doing so. At some point of time, I think when the index actually gets into a nice rhythm, then you could expect domestic flows. But I think the key event now that the budget is over and done with is what RBI is going to do with interest rates. And if there is some further reduction expected over there, and that is followed through with the banks actually reducing the interest rates, then that could be a big positive. It's not that we don't have the growth rates in terms of GDP at current prices. It's just that the interest rates are far too high to make equities that much more attractive.
Right. And would you say the same thing? I mean, from a more longer-term private equity point of view?
Yeah, I would say that actually from a private equity perspective, as long as you remove all the tax-related issues and sort of then leave it to the markets, because what we find is that the private equity opportunities have improved dramatically with the valuations coming off because of the situation in the market currently. But at the same time, transactions are not happening, or the volumes are not that high, because there is an inhibition for promoters to do transactions at this level. But I think going forward, we would see that with the market sentiment improving, it will improve the environment for this. But again, I think it all depends on where are we standing, because all this budget is with one eye to the elections next year, and with the other eye on having fiscal consolidation this year. I think the more interesting thing would be to see how the government implements the program of direct subsidies being given to the bank accounts of the poor, and the sort of pension schemes and other things that they're talking about implementing using the Aadhaar card and Aadhaar number and the subsidy, targeted subsidy, because a lot of the expenditure that has gone up on the plan side, which he talked about in the budget, how efficient are we going to implement that? Because otherwise this fiscal deficit number that we're talking about, again next year we'll have a revised estimate which will be very different. So I think how we implement that will be where the success of that will decide. I think it will decide both the way the budget will pan out in eventually the numbers, and also I think how the government looks at it from an election perspective. Because I think next
But
year.
But did you get a sense that this was at all catering to an election year?
I think if you look at it, there were some of the proposals were on a 2-year basis, they were not on a 1-year basis. So obviously it also included a year beyond next year. So there were things that were done on a longer term basis. A lot of the stuff on the plan expenditure side, all the social goodies were all very nice to do. But I think the issue has always been that we have increased expenditures, but have we targeted them better? That's the question, I think, and they are trying to address that right now. As he said in the budget, that 11 lakh people have got benefit out of it from January this year. Now the proof is the eating, and what we see going forward, how far we're going to, because we're targeting right now about 500 million Aadhaar numbers in the next 1 year. We're already at 270 million. If that really gets rolled out and we get the banking correspondents actually working efficiently, target subsidies being given, and without glitches, there will be some glitches. But
yeah, and all that will.
So if that happens,
savings.
I think you will see some huge savings. And I think that the good thing was that the increase in the diesel prices and some of the fuel costs, because if you don't increase those fuel costs, there is no reason for people to use economically. So because you are artificially distorting the pricing.
So exactly. So if you were to look at all the sequence of events, beginning with maybe diesel decontrol and price increases and so on, and going up to this, isn't the sort of government seemingly more in control of the economy?
I think they are getting better control of the economy, but it's not driven it's not a proactive step, it's more a reactive step after looking at what's happened to all the fiscal situation, the current account situation, the inflation in the market.
Right.
So, but given that, I think he's tried to address on all those fronts.
Yeah. Mr. Hiranandani, was this an election budget in your mind?
I think on the expenditure side, definitely. Okay. And clear cut that they wanted to address the poor, the women, and the other segments which really needed to do. I think definitely on the expenditure side. On the charging side, I don't think they did anything which brought about happiness to the people who are going to vote. So I don't think anybody there is kind of very excited or happy about the budget. So I think they're probably going to look at it from the expenditure side. They will be looking after the people in certain segments of society, which I think would be beneficial to the
And how did you receive the 10% surcharge on 1 crore plus income? How do you look at it?
I don't see that as a problem. There are only 34,000 people in the whole country. I mean,
42,000.
42,000 people in the whole country. I think it's irrelevant. And I think it's only a matter of show, and probably with little tax
So
planning,
are you one of
with
them
a
or
little
not?
with little bad tax planning, I don't know. With a little tax planning, that probably could have changed, and it will really not make any too much difference, because if you're doing it through corporates and other things, and dividend distribution is not happening.
Right.
I mean, the income levels of these segments are well planned, because it's not a need-based income level at that level. So I don't think. It may generate more income in this year, but I think over a period of time, what happened in inheritance tax or estate duty earlier is also going to happen to this segment, because there will be a lot of more planning done by people, and really that's not going to benefit the country in that sense of the term, but it makes a good show that you have taxed the rich. I think it's good for that purpose.
Okay. Dipen, coming back to the markets, you talked about the signals that could come and that could drive the direction of the market. So you said that the signals that are not there, for instance, is corporate profits, which are not looking particularly robust. There's no real flows apart from foreign investor flows. What else could be there that could change or cause a change in the way the markets are moving?
See, I think lower oil prices, that could be a big trigger. We keep talking about oil prices have to come down because of huge shale oil being found in US, and US becoming self-sufficient in crude oil in the next 5-6 years or so. So if you see lower oil prices, and if you're able to control the fiscal deficit because of that, then the entire equation for India changes, because the fiscal deficit comes under control, inflation comes down, so interest rates come down, interest rates come down,
commodity prices go down.
So that could be one major trigger which could change. Even if it doesn't change, then you have to wait for a year or so before that particular problem gets resolved through higher diesel prices, which the government has been thankfully raising in the past 2 months we have seen, and they should keep the resolve even during the tough months, because we have 5 state elections coming up this year as well, and the big one is there early next year. Hopefully it'll be next year, not this year. So there are going to be some political compulsions, but if whatever steps have been taken so far, the government walks the talk, then I think you can see a better market maybe next year, when a lot of these macro.
So you're writing off practically
as I said,
9 months of this calendar year.
This year is more of flattish market and more of sideways movement, and then maybe when you see really the benefit of lower interest rates coming through, and all the political turmoil be over and done with, then maybe you could have.
So what should investors do?
See, this is a good time to have a look at what quantum of your savings are there in equities. And I think at every correction, you should look at increasing your exposure to equity. I think that over the next 3 to 5 years or so, it could turn out to be the best asset class in terms of providing returns, given the gold situation it is in, and the fact that interest rates will come off. So, FDs and other income kind of products, even mutual funds, will not deliver as much return.
Right. So, Niranjan, of course, real estate is not correcting, and it's not coming off, and it only seems to be rising. So what do people do?
I think there are several things which we could have done and we can do in the next year. One is implementation of projects. I think that's not happening. So a large number of capital is sitting in. I've talked to many bankers, and they say we have sanctioned projects, but they're not taking off. Environmental permissions are not coming up for a large number of projects. And I hope the Capital Committee for Investments is really going to be effective in terms of how they take up these projects. I think it's very, very important. Infrastructure projects relating to states. For example, let's take Mumbai. We have the Cross Harbour Bridge, we have the metro, we have the coastal road, we have the Navi Mumbai airport. All these are not directly but indirectly linked with central funding, viability gap funding, and things like that. And even on the non-budgetary issues, if we take these projects off the ground, the multiplier effect of giving approvals quickly is far more than what else you may say. And of course, the governor of the Reserve Bank is the most important of all. I think if we can convince him that we need to reduce interest rates, I think it will be an extremely a boost into the.
But is this a good time to buy a house?
I think if you don't buy it, you'll be in trouble, because the inflation cost and the amount of taxes which are being increased. And remember one thing, today government under the new land acquisition bill is going to buy land at twice the market price in urban areas and 4 times the price in other area. And once the government pays the higher price of 4 times the market value registered, all the prices go up in that area, because even the other people who are going to sell to private people are not going to sell at a lower price than what government is buying. So you will find that once the land acquisition bill becomes effective, the cost of land is going to go up. So effectively, land cost going up in all areas, plus taxes going up the way they are. And only thing respite is probably little inflation. Hopefully, will come under control this year. I don't see prices really getting corrected, and especially with policy not getting implemented and executed, difficult.
So unless there's a sort of strong supply surge, you feel that prices...
You need to surge supply by a huge amount.
Right. So,
and it's accepted by government. I had a talk with Mr. Ajay Makan, and he accepted the fact that they need to increase the supply in those areas where they are needed. And he's very proactive on the subject.
Right. Summing up, how would you look at the year ahead in terms of raising funds and getting investor interest?
I think it's positive. The sentiment will improve going forward. But I think there will be nervousness also from the investors because of the upcoming elections. So on that count, I think it will be more or less flattish as what he mentioned. So I think from a fundraising perspective, it's largely driven by global trends.
Right.
Of course, the Indian story, selling, if you can sell the Indian story positively, that will be a good sign.
So is it a good story so far?
I think it's in the right direction.
Yeah.
I would say that it's not like we're not going to see things happening immediately.
Right.
But I think the tone of the budget, setting the mood and the direction is positive.
Depend, good India story, good, bad, not so good.
Well, not as good as 2004, 2007, but still enough to attract investors.
Last word, Niranjan. Good, bad. No.
I think by and large good, especially on the expenditure side.
Right. Okay, gentlemen, thank you very much.